Welcome to Magnet Minutes. I'm Jordan Kimmel with an update for July 5th, 2022. And we have a special guest on today. We have Alex Berg, the CEO of Index One. And Alex, thanks so much for joining us.
Yeah. Hey, Jordan, and thanks for having me on.
Well, Alex, I'm really looking forward to this discussion. And for the audience, I met Alex almost a year ago. He does some work for Index One. Index actually does some work for Value Engine, as well as a host of other industries and companies. And Alex is headquartered over in London. And Alex, what I want you to do is I'm going to actually share my screen for a minute. I'm going to allow you to really discuss a little more detail what Index One capabilities are. And then what I want to do is actually, you completed a study for us on our facts model. And I'm really excited about showing your work and then talking about potentially even starting our trust index. So let me go ahead and share this right now. And what I want to do is go to your slide, and this is where kind of I'm starting, if you will. This is something I think really helps you explain your process. If you want, take it away.
Yeah, sure. So for a bit of background, we're a index calculation company. We've been around for about 3 years, and yeah, we offer index backtesting, index design solutions, and live calculation and maintenance of indices. So yeah, this slide you're on covers some of the core functionality or core values that we have as a company. So number one, we've built a very automated solution which automatically handles calculation, rebalancing, corporate action treatment of indices. And as a result of that, we're able to offer index calculation at a very low cost compared to the rest of the market. And regarding our sort of core business and solution, why we think it's necessary is, we believe that there isn't really any sort of generic index that works for every use case out there. There are market trackers that track, for example, the X largest companies within a certain sector or country, but depending on the use case, whether you're a retail investor or institutional, you might have certain investment constraints, existing holdings. Every sort of index tracker really requires a custom index and some thought put into how the index is constructed. So using a generic index doesn't always work. In terms of the third point on here, ESG, I wouldn't say, I would expand it also beyond ESG, that any type of either constraints or requirements or ratings, data points that investors want to make decisions based off of, we can incorporate into indexes.
Right. So that's just an example of a thematic type of backtest or index to create, right?
Exactly. Yeah. So, ESG, within that segment, index providers are generally focused on carbon emissions, for example, but you can incorporate other factors as well. So the social factors, governance factors, or it could be other, let's say, faith-based factors that don't necessarily fall under ESG.
Or even trust-based, and we'll get into that in a few minutes.
Yeah, exactly. Yeah. Yeah,
So
regarding
let me just jump to the next piece for you, because again, I think it's super flexible. You know, I've been around the business now for quite some time, and what I find is, you know, the indexing business is getting much bigger. There's, in fact, your team sent a note that index is now replaced active as the largest sector. And I just came over to here and, you know, give you a chance, you know, why index won, and a couple other pieces and clients that you've worked with.
yeah,
So if you want to look at this slide and talk, by all means.
yeah. So the sort of index space as it stands right now is dominated by essentially three large providers of indices. I think the most recent statistic is something that 80% plus of index revenues are controlled by essentially three companies, and it's become quite clear that, you know, the existing solutions are relatively slow in terms of index development. So how quickly you can produce, backtest, and launch new index products. Pricing can be extremely high and discriminatory to certain types of firms, especially smaller firms are sometimes priced out of using index solutions, either generic existing indices or custom indices. Lack of customization and lack of ownership as well. There isn't really another or that many solutions out there that can allow you to fully outsource, you know, the calculation, maintenance of the index at a reasonable cost and a reasonable pace, and still be able to retain ownership of that index, full licensing rights, distributing it to your own clients, and having control of those relationships.
Right. So let me just share something now that that you've actually worked with us on. And you know, so over 10 years ago, Alex, and you know our history a little bit, over 10 years ago, we saw a breakdown in the financial markets themselves. It was 07, 08 era. We were saying the index or the markets were breaking down, not so much because of valuation, as we saw in the year 2000, but as a lack of trust. And so being a multi-factor investor already who blended value, growth, and momentum, we said, let's actually come up with a measurement for the trustworthiness of public companies, and took factors including the financials, but coupled them with corporate governance and sustainability and transparency. And this was just a couple of years before the ESG movement began, if you will. And so we had 10 years of data. We've actually been managing through separately managed accounts, live processes of this. But for whatever reason, Alex, people love to say, well, is there a back test on this as well? And so we came to you, and maybe if you want, we could describe, you know, what you did and how you created a back test for our model called FACTS, which is an acronym looking and measuring the most trustworthy companies in America. You could talk about the flexibility, what you actually did, and then we can actually show the results.
Yeah, perfect. Yeah, I mean, just first of all, I think facts and trust as a theme, you know, is something that hasn't been covered almost at all within the investment space. And, you know, from my point of view, it's been very interesting to work on that and sort of offer something completely new to the market. But yeah, what we did in this instance is we took ratings on, I think, 800 plus companies based off of the facts metric, so a trust factor of these firms as a time series attribute. So their rating essentially at every point in time, going back about 10 years. And what we did was we constructed different portfolios, or in this case, indexes that consisted of, the top rated companies according to facts, different sizes of buckets, so different levels of conviction to the metrics, and rebalance them annually. So at the publication of new figures for each year, and ran back tests for each of these back tests within our solution, which is a relatively straightforward process, and handed the data back to you guys.
Right. And so just to be clear, because both of us are in the business so deeply, we're actually, in the forest. And to back up a little bit, in order to do these back tests, other parties come to you, provide you with the actual, either their top picks or their ranking. And then you have the flexibility of saying, hey, what do you want me to do? In this case, for tax efficiency and for people who want to trade less and maybe have tax advantage, we only rebalanced one time per year. Okay. And what you also have the flexibility of saying, what would you like us to do? The top 10, the top 25, the top 50. And with that kind of flexibility, you have the ability to really just provide the end user with whatever they want. Now, what I want to do here, because I'm extremely proud of what ended up happening, you are able to crunch all of this data and provide mountain charts for the actual results. And so what we're showing here is just your data, where the facts process, we did two things. We did the top 5% and the top 10% of that 800 plus, and we are benchmarking it or showing it against both the S&P ETF, but more importantly, what you can do is you want to ask somebody, what is your benchmark? What is your model actually benchmark against? In our process, we call facts value with values. So what we do is part of our screening process eliminates companies that don't pass corporate governance scores, that don't pass sustainability metrics of operations, certain transparencies. So just to contrast, Alex, where ESG, I don't think a lot of ESG people have these 10 years of granular data. And what we saw take place is a lot of indexes chose to run with simply top performing stocks. So companies like Facebook, Google, which may have had very good operations, were actually screened out by us because of corporate governance scores and things like dual class, stock offering, and control ownership by CEOs. So our proper benchmark is actually the Russell 1000 value, because in addition to screening out for corporate governance, Alex, we also screened out for value, meaning high PE stocks were simply eliminated. Companies like Amazon and Netflix, which had great operations and great growth, traded at PEs that were just too high. So we're not going to spend too much time on what a lot of people call the Greek. But, I have been around these back tests for 30 years, and things like the alpha, beta, Sharpe, trainer, the correlation coefficient, just as important, the maximum drawdown, the upside to downside capture. These are numbers where, whether I like it or not, consultants and institutions are driven by these factors. And so what I want to mention here, which is kind of really interesting, I happen to be reading a book this week The Most Important Thing by Howard Marks. And he talks about, he has 3 separate chapters on risk. So if you could achieve the same returns with less risk, that's a pretty powerful opportunity. If you could exceed other indexes with less risk, that's actually the holy grail. So what, we just came through a period where basically nothing approached the S&P 500, which is concentrated in maybe too few of these technology companies. The backtest actually exceeded the S&P, not by a lot, but it exceeded it with companies with dramatically less price earnings ratio, dramatically less price to sales. And so it's this kind of numbers and approach, with only 1 trade per year. So we talk about high-speed trading and the need for, this high-speed frequency. But the issue is we are actually showing tremendous returns, even above S&P, and actually taking the Russell 1000 and just trouncing it, over these 10 years. So, we're very, very pleased at the results. And again, these are not results that we created, right? What we basically did is handed you the big database, and through your computer programming and backtesting abilities, went in and said, well, if you would have held the top 25 and held the top 50 and only rebalance once a year, these would be the results. So I actually managed for 10 years SMAs, but we did for 8 years, Alex, we only rebalanced once per month. But, not very tax efficient. There are a lot of things, for the public, unit investment trusts out in Europe, your way, London, they love UCITS. And so I want you to talk maybe for a minute or so, or just to bring up your ability to create an index, not our top picks, not our back test, but to create an index. And then what we're going to do is compare our top companies versus the index. So if you'd like, maybe share how indexes are created. I know you've done them both publicly and privately for other groups. And so we're going to come up with the trust index, and we're going to rely on index 1 to carry the process. So please share the capabilities and maybe methodologies.
Yeah, I mean, indexes, they come in various shapes and forms. As you probably know, you've got, very high conviction indices with relatively few constituents, thematic indices, very broad sort of market trackers. And as far as our capabilities go, we've essentially built our system to be as flexible as possible as it comes to things like rebalancing frequency, coverage of assets, different ways to weight the index, handle transaction costs, corporate action treatment, ways of limiting index turnover. So yeah, we've essentially built a solution that tries to be as efficient and performant as possible as it comes to designing essentially any index you can think of. And yeah, sort of very excited to start working on an index like this. It's something that I haven't seen in the market yet, and I do think it's something that is very interesting to various different types of investors. Clearly, there's some alpha captured there, as we can see in the results. And an index like this can have a home in for example, exchange traded products or individual portfolios, or used as a benchmark. So yeah, I think it's a very exciting time.
Yeah, well, we're excited about it, Alex. Frankly, I've been again in the industry for 30 years. I've had products licensed before. But what's really dramatic is when we started this process, and it was I say 10 years, it's really closer to 14 now. And then we actually started to run live money after a couple of years of hammering away to create this model. We said that, and again, this was in the depth of the financial crisis. We said markets heal, recessions end, but because of the breakdown in trust, a lot of individual investors aren't going to come back to the market. They just don't trust companies. And so we approached all these institutions and with this idea, and they said, you know what, prove it. Let's see if this thing actually works. So now we're live for 10 years with great results. We have this back test that I'm just thrilled to share, but we're also now going to create an ongoing index with the help of Index One. And I think you're right. There's a lot of debate of who has the highest model, the best model for momentum or for value or what have you. There is no model in the world that focused on trustworthiness of public companies. And it's a big task. It's a big bite. And what we're hoping to do, Alex, is actually show people by investing in the most trustworthy companies, they could not only have a really good return, but they could feel comfortable with the operations. And people, as you know, millennials and a younger generation care as much how companies operate and how they treat their employees and how they treat their customers. And you could do polls, you can do whatever you want. We chose the approach of hard data and metrics that actually measure trust. So we have a paper that's going to come out with this. And Alex, we have used dozens of back testers. And I'm going to share with you that Index One for us showed, one of the greatest flexibilities, and perhaps maybe either technology got better or Alex Berg created a better system. So I'll give you the credit, but we love the relationship. The next step we're going to take together is to introduce the Trust Index. And I really want to thank you for the great work that went into the back test itself, the ability to show the results. And we expect to have you on our podcast again for periodic updates. What we'll really see is how our top 25 and how our top 50 actually work against the index, and how the index actually compares among the more broader indexes. So I really appreciate your time today, but all the effort over the last several months of working together and creating the studies.
Yeah, thanks, Jordan. And yeah, I'll reiterate again, I think very excited to be working on this and bring something novel to the market. And yeah, looking forward to moving this ahead.
Good. So listen, Alex, just on the way out before we wrap up, for other groups, other financial institutions that may want to go to Index One, it's easy to spell, but why don't you share maybe a website address, a URL, where they could find you and maybe do their own studies and their own back tests on their own themes?
Yeah, so we're over at indexone.io. It's so index and one spelled ONE.io. And yeah, we support backtesting kind of as a service where we can help you find the value in a data set, construct an index based off of that data. or a fully sort of self-service model for folks who want to create their own indices, backtest different strategies. It just requires essentially signing up and getting on with using the platform. So, yeah.
Fantastic. So in the middle of Wimbledon, we have Alex Berg coming live from London. You guys had the big Grand Prix over there this weekend as well. So it's a busy week in London, but thanks for your time today. And no doubt we're looking for a whole lot of work together in the future. So this is Jordan Kimmel wrapping up a Magnet Minutes with Alex Berg, Index One, for the Informed Investor.